Looks like we got it this time. Man, recording is tough. I thought recording was easy. Can be something we could get done. Man, I've been working on this since Friday night. A couple of them ended up on the cutting room floor. Anyway, my name is KC. To introduce myself, I'm a trader. I've been trading for over 11 years. I wish I can come at you like how all those other people come at you now. No, I made all this money, I did this and did that. But that's not the way we roll. We're going to keep it real and tell you what it is. What we're going to do, we're going to set up a trading room that we're just going to trade live day to day and just show you how I do it. There's a lot of different ways to do it, but I like the way. I've tried a lot of those different ways, but this is what works for me. Anyway, it's a beautiful Sunday morning heading towards Sunday afternoon in New York. So I'm out on the deck. I got the shade behind me and I have my charts set up in front. So what I'm going to explain to you or show you is how I trade. First off, I use two, especially when I'm working day to day, I like to use two time frame in particular. Before we get into time frames and all that, I want to actually go ahead and show you how I look at the market or how I treat the market. Some of the things that are key for me, some of the things that I like to see. And we're gonna flip this to 1 hour. Let's change this. Let's get it off of that. I was templating all my templates, so I kind of left it on that. But we're gonna go to the pound US dollar on the 1 hour time frame. I'm gonna explain to you some of the things. I don't want to get too in depth. I'm not going to get into the calculation, how I put in, why I chose this particular indicator, but I'm just going to show you how I use it. I call this my double band. What I use it to do is to try to give myself a bias. If you have a bias, and you trade your bias, it'll keep you from making mistake, especially what the mistakes most traders make. I try to put the market into two categories. There's buyers, there's sellers. And I set up my chart in a way that I can read it in that way. We're going to use this dotted line right here. As you can see, dotted line, consider it like a highway, just a 2-lane highway. Sellers going this way, buyers going this way. I call this southbound, and I call this northbound. If you're in the southbound lane, you're going down. Did I say it right? If you're in the southbound lane, that's right, you're going down, just like the way our country's set up. South meaning they are going down to Florida, north, you're going up to Maine. Okay, so I like to split the market in two. So if the market is on this side of the line, it makes me a buyer. I'm looking for primarily buys. But before we get into buys and sells, we got to understand how the market moves. The market moves up, as you can see right here, market moving up. And you can also see that the market moves sideways. Just like here, sideways down, sideways a little bit down, up a little bit down, sideways a little bit up, sideways a little bit down. So we have all this back and forth in the market, and I like to explain the back and forth. Most of the time, when the market is moving back and forth, we think it's a random thing, but the way I look at my chart, it is not random. It's just the way I learned to read the data. We got to understand what we're tracking is price. Every time price moves, it leaves a mark. And that mark is calculated into each candle. And each of these candles, high-low price, creates the movement of my bands. That's why I said this splits it for me into two categories. You got your buyers and your sellers. Here we know, we can see that the market is selling from this line down. But you do have buys. But until you know how to play the game, you can't just jump in and out of trades. Know that you can buy in a sell market and you can sell in a sell market. But what I'm saying is, who is in control? The market, if the market is on the sell side of my indicator here, what the market is trying to do is make lows. The market made a low right here, pull back here, pull back to the means, right in here, and I'll mark it. I'll just use an M. I'll use my staff and I'll write in means. The market made a low, move back to the M. I can't write with this. But move back to our dotted line, broke it, made another low right here, pull back to the dotted line, made another low right here, pull back, made another low. And the market will just keep on repeating these patterns over and over and over. Okay, but like I said, the purpose of this video is to show you how I look and relate to this market. So let's talk about the two outer bands, which is here and here. I call this my extreme selling area and my extreme buying area. Most of the time when the market is in the middle, it's like, okay, this is indecision. When the market crosses this area, it's made its decision. It's going to make a lower low. Every time it hits this area, it's going to make a lower low. When markets, primarily, what you're trying to do is trade away from the middle. Not back to the middle is generally a little bit more jagged. As you can see, when we trade away from the middle, it's pretty much smooth. Trading back is very jagged. Trading away, smooth. Trading back, jagged. Trading away, smooth. Trading back, jagged. Trading back, jagged. Trading back, jagged. Trading away, smooth. That's because we're on the sell side of the market. The sells are going to get more smoother move when you're in sell territory, just like you're going to get smoother move when you're in buy territory. But you have to qualify your buys and you have to qualify your sell. Just because the market is in buy territory doesn't always mean that it's ready to buy. That's why I use 2 time frames, primarily 3, just to confirm or deny to my buys and sell. So as we can see, like I said, extreme buying, extreme selling. Sell side of the market, buy side of the market. Right? So now that we have that down, let's switch that. And let's go over something just to make it clear. It doesn't matter the time frame. We'll start from the 1 minute time frame. Same thing. 1 minute. Same thing, buy side of the market, 1 minute, sell Sell side of the market, 1 minute, does the same thing. 5 minute, does the same thing. Sell side of the market, does the same thing. And I'm going to teach you that we can start to know where to mark those breakout areas. We'll know here, breakout. We'll know here, breakout. This is a perfect area to show you what we're actually trading. We are trading, either you're trading an expanded market or you're trading contracted market. When a market is contracted, you're going to get a lot of sideways movement. When the market is expanding, you're going to get a lot of trending. Market compress, sideways, market expand, trend. See, what do I mean by expand? If we take our crosshair here and measure from the top band to the bottom band, we register 28 pip, and this is only in a 5 minute, but it does it in all time frame. If we take those same mark, move them to the top band in an expanded market, move it here and move it here, and measure the same bands, both expansion point, we went from 28 pips to now the market is 81 pips. That means it expanded from here, which was 28. You can see the numbers right there. It's not a lie. And it went to 81 pips. As that market keeps expanding, it keeps growing. Bottom of the mark was right here, right? Your eyes don't deceive you. We're 81, now we're at 90, still expanding. Now we move it here, and then we'll move it here. It was at 90, right? So that way you don't say my eyes are deceiving. Went from 90, now we're at 100. Still expanding. Now look at this. These lines do not lie to you. Now we go right here. Right here. And right here. 100, now it's at 40. Contracted. As we expand, the bands move out to 100 pips. As it contracts, it now moves to 40. Markets, you know when you're in a contracting phase, because most of the contraction is done when the market is outside of our lines. You see here, trade outside, market expands. It moves in a little bit, market contracts a little bit. As it starts to move out, market starts to expand again. As it moves in, market contracts, out, market expands, move in, this move right here, the mathematical formula of the highs and lows of these candles create the compression. You see that? There's no more lows. You see these candles? One. Let's take this candle here. We have a candle here. That is lower than the previous candle. This candle is lower than the previous candle. That candle is lower than the previous candle. This candle is lower than the previous candle. And it doesn't matter where the candles close. As you see these wicks, it still measures the high and low of that candle. Doesn't matter where the wick is. And as it stops making lows, like in right here on market, highs and lows are completely stopped in this here. No more highs, no more lows. Market moves into contraction. You measure from all these candles, measure from here to here at the end of this last candle, 29 pips. Market contracts. Elder Richards, you you gotta give me a 5 minutes. I'm in the middle of making a video.
Making a video.
Oh yeah.
Okay, 5 to 1 is me. You want to share that for yourself?
Okay.
All right, good.
Sorry about that. I had to take a quick phone call. So and like I said, as the market stop making high lows, we contract, and it does it in all time frames. We're currently on the 15 or 5 minute, and we'll go down. We'll see this move over and over and over. Expansion, contraction, expansion, contraction. As markets contract, the tighter the contraction, bigger the move. Look here. Markets contract here. Markets move. Expand. Tighter the contraction, the bigger the expansion. Markets move. And these are the moves that we're going to be looking for and trading over and over. When we go to our live market, I will be able to explain it in detail. We'll go over it. We'll go over it. We'll go over it for as long as you want to hang out. So hopefully you'll go back and watch this video. And as you watch this video, we can go over the ones and twos of my setup and what I'm looking for. That was the 15 minutes. Now this is the 30 minutes. We'll remove these lines right here. That's pretty much. Markets compress, markets compress, markets expand. Markets compress, markets expand. Markets compress, markets expand. Over and over and over. Okay, so that was the 1 hour, same thing. 4 hour, same thing. We're in an expansion phase on this peg. So this is probably a good pair to look at when the market opens up. We'll check and see that. We're still inside the containment zone on the 1 hour. A containment zone. I call inside here the containment zone. I call the outside your expansion. Look at this, even on the daily. Look at this massive expansion here. It expanded for 1, 2, 3, 4, 5, 6 days. Look at this expansion. Could have made money all these days. And then the majority of the time is going to be spent in contraction. Inside your containment zone. Once it goes outside that containment zone, markets start to expand. So we know it done on daily. What about the weekly? It does it there too. It just haven't done it in a long time. Look, the last time it expand was here. What year was that? That expansion started in 2008. Wow, 2008 was the last weekly one. There's another one here. One expansion in 2015. And we had an upside expansion. Very little though. That's going way too deep. We don't need to go that deep. Well, we understand what we're talking about there. Okay. By the time the markets start up, we're gonna use our 15. It doesn't matter the side, whatever side I feel comfortable. I have my 15 over here, over there. We do our 1 hour over there, which is already at so hopefully you get a brief idea of what I'm talking about, and we'll see. Like I said, I'll make these videos daily, and we'll go. God bless.
Press markets expand. Markets press markets expand. Over and over and over. 1 hour, same thing. 4 hour, same thing. We're in an expansion phase on this peg. This is probably a good pair to look at when the market opens up. Check that. We're still inside the containment zone on the 1 hour. The containment zone. I call inside here the containment zone. I call outside your expansion. Look at this, even on the daily. Look at this massive expansion here. It's been for 1, 2, 3, 4, 5, 6 days. Look at this expansion. Could have made money all these days. And then the majority of the time it's going to be spent in contraction inside your arcane containment zone. Once it moves outside that containment zone, markets start to expand. So what's going on with the daily? What about the weekly? It does it there too. It just haven't done it in a long time. Look, the last time it was expand was here. What year was that? That expansion started in 2000. Wow, 2000 was the last week. Another one here. One expansion. 2015. We had an upside expansion. Very little. That's going way too deep. We don't need to go that deep, but we understand what we're talking about there. Okay. So by the time the markets start up,